In this video, I'll show you 3 simple steps I use to catch clean, high probability mean reversion trades. By the end, you'll know exactly how to spot the setup, wait for confirmation, and trade it with confidence. Step 1. Identify the higher time frame trend. As you can see, this trend is bullish. The bullish trend consists of higher highs and higher lows. You want to start with context. As you can see, I'm on the daily here, but you could use the 60-minute, the 4-hour, whatever, to identify the higher dominant trend. The goal is not to predict a top or bottom. That's where a lot of people lose, is to align yourself with the reversion trade of the larger structure. And I recommend zooming out so you can see it better. But for this example, I just did the nearby levels. And if you drop down into lower time frames, you can see the nearby levels more clear. You can see price tapping the support and resistance on the lower time frames a lot more clear. But the lower time frame levels, those are going to be a lower probability trade. So I would recommend sticking to the higher time frame levels. Also, don't forget to mark the previous highs and lows. These are major liquidity levels. These are where traders like to have their stops, and institutions will run these stops out and then reverse it, also known as turtle soup. So make sure you mark those. A lot of people also, for mean reversion, will use a Fibonacci. You can do it from a micro swing, which is this one here on the 4-hour, or you can use it on the macro swing, which is the larger swing. That's going to be from low to high because you want to get the support for a bullish trend. And you don't have to use a Fibonacci. I don't use one. But if you're new to trading, this can help a lot. You could spot key levels easier. You can catch a mean reversion trade. And basically, to do that, you would want price to pull back into one of the levels on the Fibonacci. Ideally, the 0.618 level, also known as the golden zone, and have a reaction off of that. And that's for a bullish trend. And let's just give you a quick example. Let's pull price from this low to this high. We're looking for support. The trend is bullish. As you can see, price came down into the 0.618 level, wicked off of it, and then continued higher. Okay, for the last step, you want to see price come down into one of your levels and have a reaction. For this strategy, we want to see a star pattern reaction. If you don't know what a star pattern is, you can just Google it and you'll see exactly what I'm talking about. So this is a morning star pattern, and I like entering on the 5-minute. You can enter on a higher time frame and have a higher probability trade. So you're going to want to put your stops right below the pattern and target the previous swing high. Leave a comment below what levels you like using. Let's break down an actual trade I took using this strategy. Okay, so here we are on the 4-hour. Price ran out this previous 4-hour swing high, which you can see from this red line right above this wick. Once price ran out this level, and this was during pre-market, it hit a resistance level. This is a higher time frame level. Once it hit this level, it showed weakness, and the weakness that we want to see is the star pattern formation. This one is an evening star, indicating that price is going to go back down. Once it started to go down, it hit another level, which now turned support, showed strength, showing our sign once again, the star pattern formation. Okay, so let's go over our 3 steps again. Step 1, you want to identify the higher time frame trend. If the trend is bullish, you want to see higher highs and higher lows. If the trend is bearish, you will see lower highs and lower lows. Step 2, you want to mark off higher time frame key levels. This is previous swing highs and swing lows, all-time highs, and all local nearby major levels where you can see price touched for resistance and support. This will make the level more of a reliable, strong level. Step 3, you want to wait for price to get to this level and have a reaction. The reaction we want to see is a star pattern formation. Do not assume it will have a reaction. Wait for the reaction. This is very important. You want to read what price is telling you and not try to predict what's going to happen. That's gambling. If this video helped you see price differently, subscribe right now because the next one is going to take structure to a whole new level and you will not look at price the same way again. Also, before your next session, grab my free top-down trade planner in the description. It's a checklist I literally use every morning to stay consistent and prepared.
High volume.
Am I really that?